Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 14th at about 12:45 p.m. Eastern. Well, world stocks extended gains today while the dollar held near 15-month lows after U.S. inflation data this week unleashed a wave of investor optimism that the U.S. Federal Reserve was nearing the end of its rate hiking cycle. Data showed on Wednesday U.S. consumer prices growing at their slowest pace in more than 2 years. That's a good thing. And on Thursday, the smallest increase in U.S. producer inflation in nearly 3 years. Today, the government also reported that U.S. import prices dropped 0.2% last month. We'll take it where we can get it, right? So on all of this news, let's go on to 3 charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, we follow the SPY because it's kind of a guide to where the broad market could go next. And today when I captured this chart, the SPY was trading at $449.69, or about $44.96 on the S&P 500 itself. Now, we always take to mind here that the all-time high for the SPY, that's a rhyme, was in January of 2022 at $479.98. And so now at $449 and change, we're about 6% below that all-time high. So we've really come up a lot since the beginning of the year. Now, from the SPY's, here's May, from its breakout in May, after the debt ceiling negotiations concluded, the SPY, as we all know, continued in a bullish move that rose up to June 15th highs at 443.90. Since then, of course, we've learned that the Fed intends to raise rates 2 more times, possibly in the near future. So from this high, the SPY pulled back to the red line, the 20-day simple moving average, and has continued to use this line as a trend line. So this is the 20-day moving average, the red line. This is the kind of a midterm moving average, the 50-day moving average, very popular with investment brokers, and the 200-day moving average. And we always want these moving averages in the position, of course, with the 200-day, the lowest, 50-day in the middle, and the 20-day at the highest. And as you can see here again, the 20-day is really, since May, has been acting as kind of a trend line for the the SPY. Now, we're looking here at, let's go to the short term here. On July 11th, the SPY bounced off the 20-day moving average and jumped up to its current price. Now, this is a steep move. I want to take that into consideration. And I do want to say that I like to look at long-term charts. I like to look at weekly and monthly charts. And I did so this morning, and I found that at 450, the SPY, and that's about where it is right now at 449, the SPY is now moving into long-term price resistance at about 450 from April of 2022. So we have some long-term resistance. You can't see on this chart, but if you look at a longer-term chart, you can. We have some long-term resistance coming in at about 450. And if we think back to the short term here again, this move up in the past week has been a steep move up. And we all know that when price goes up pretty much straight, that some profit taking does come in at some point. So in the short term, the RSI now is overbought at 70.68. It becomes overbought at 70. We know that when the RSI gets overbought, that sometime in the near term, the price usually comes back down, as it did at this point in June. We can see the RSI rose up. Then we can look up and we can see that there was a pullback here. Not the end of the world, but if you're short-term trader, you do want to keep this in mind. Maybe think about taking some profits or raising some stops. Now the SPY, though, in the long term is still in an uptrend, and that's a good thing. But again, short-term traders will want to pay attention here. Now, nearby support here comes in at the 20-day moving average, excuse me, at $440. It comes in at 437 right down here, and it comes in at 431. So those are nearby price support levels. So all in all, I'm going to raise stops on short-term trades here and keep an eye on the SPY in the coming week. Our next chart is a daily chart of the QQQ. As you all know, the QQQ is the exchange-traded fund that closely follows our benchmark NASDAQ 100 ETF, again, the QQQ. The QQQ represents the top 100 non-financial companies by market capitalization in the NASDAQ, like Alphabet, Amazon, NVIDIA, AMD, Tesla, those kind of big momentum stocks. Now, when I captured this chart today, the QQQ was trading at $380.03. Now, the all-time high for the Qs was November of 2021 at $408.78. So now, like the SPY, now we are about 6% lower than the all-time high. So we're sure getting there. We've made a lot of progress since March of this year. The Qs, again, have been in an uptrend since those March lows down here at 285. As you can see, the Qs have kind of used, except for this little drop here in April, has kind of used the 20-day moving average as a trend line. Now this line gets a lot tighter as we move into May and June. We had quite a move up here, and the Qs got oversold on the RSI, as you can see. So back at the end of June, price had to dip back down here to the 20-day moving average. Let's see, in June right here, the Qs shot up to a high at $372.85 on June the 16th. So the 20-day moving average has come in handy for both of our indexes that we've used. We don't know that that's going to stay that way, but it certainly has. And so now we are overbought like the SPY is again right now. Not badly, but we're overbought at 72 here on the 14-day RSI. Our resistance high is the high of today. Now, as you can see right now, I hope you all can see this candle right there. At the moment, it's a gravestone doji, which means price opened at this point up below yesterday's or right at yesterday's high. I don't know if you can see, this is kind of small. Then price moved up to a high today at 382.86, and since then has come back down to $380.03. No big deal, but I suspect that most of these indexes are, and especially the stocks that make them up, are getting a little tired now. As you may know, I was gone for the last 2 weeks, but when I came back and looked at the charts, I was surprised to see that I didn't keep as close watch on vacation, that many stocks have climbed dramatically, and especially in the last week. They've gone kind of straight up. So while that's tons of fun, in the short term and in the long term, we want to pay attention to the fact that profit taking does come in at some point. Also, I want to tell you here that if you look at a long-term chart of the Qs, we can see resistance at this level from the last quarter of 2021 and the first months of 2022. So just be a little bit careful here. Near-term price support is at the 20-day moving average, which is coming in right now at 367.78. Then we have more support here down here at 357. We've got the 50-day moving average coming in here at $350.87. So let's trade wisely here, and please keep an eye on your stops. Our final chart today is a daily chart of the healthcare select sector spider fund, the XLV. It has 65 holdings in it, including United Health, Johnson & Johnson, Lilly, Merck, and AbbVie. Now, when I captured this chart today, the XLV was trading, as you can see right here, at $131.74. Now, look left on the chart with me back here. It made a, not an all-time high, but it made a high in December 2022 at $141.77. Then it slid down very gradually, and then more of a dip in February down to its March low at $123.60. That's quite a fall. Then, of course, COVID was getting over with. Then it rallied up to, where am I looking here? It fell down to the March low at 123.60, rallied up to an April high right here at $135.81. That was quite a jolt up. Then fell to its May low at $126, rallied, consolidated, then dropped to $129 down here, then snapped up to its current price today. Now, its current price snap up had a lot to do with United Health coming out with really good earnings today. So, and United Health is definitely being looked at as a place to be. So it is an expensive dollar-wise stock, United Health. So if you want to participate in that particular stock at a little different price, you can. If this goes well, the XLV will let you do that. So in the coming week here, the way XLV, look, we've got higher lows here. We can draw a trend line like this. Okay, we can draw a trend line like this. Then we can take our crayons and we can draw an overhead trend line like that. So what usually happens in a triangle like this, where the lows get higher and the highs get a little lower, but then usually price will break out to the upside or to the downside for sure. So let's see what happens here with healthcare. I think that so many tech stocks are way overbought right now. And I think it's possible that some of these healthcare stocks, people are going to give them a serious look, I suspect, in the upcoming future here. So in the coming week, if the XLV can stay above here's the lows at 129. If the XLV can stay above the lows at 129, and note here how the 20-day, the 50-day, and the 200-day moving average, note how they're all coming together here. Now, if the 20-day can break out and move up over the 200-day, which if, of course, price starts up, that is what will happen. But if in the coming week, to make it simple, the XLV can stay above the lows here at 129, and if the market behaves reasonably well, I will add a position of the XLV to my trading portfolio, and I'm going to make my stop pretty tight down here at $128.50. If and when the XLV rises above the prior highs, right back, you see these highs here? They're in at $133.50 and $133. So if and when the XLV can rise up over those prior highs, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XLV in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, trend trade, bottom fish, and more, check out all of these programs right here. How to read charts is great for novices. 3 winning setups is great for short-term trades. And bottom fish like a pro is coming in really handy right now to pick some bottoms on these stocks that we want. These programs will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen right here, or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.